Hello guys, welcome to a Trading Parrot. Over Sunday, apparently Trump has reached a deal with Europe, and this is so far having a positive impact in the price action. In today's video, we're gonna see how things are shifting in the order book as we approach general markets open. I'll cover the gap that we are seeing between S&P and Nasdaq in terms of price action as well. I'll talk about the breakout that we are seeing from the falling wedge, and I'll give you an update on all the different time frames as we close the weekly on Sunday. Make sure that you do not miss that part as well. Guys, if you like this type of content, make sure that you're subscribed to the channel. Hit the notification bell to get notified every time I put out one of these videos. Thanks so much for the 4.4K views in the previous video. The Sunday Alpha Special was 1 hour, and I can clearly see that the amount of people supporting this in-depth analysis over weekends is overweighting the amount of people that do not have time to dig that deep, which is fair enough. I totally understand it. Not everyone can escape for 1 hour on a Sunday to consume that amount of alpha. Guys, I have a new campaign coming in on Bluffing. This time you can win a Rolex. Of course, not everyone gets this amount of trading volume, but there are different rewards and gifts depending on your own trading volume. This is a non-KYC exchange, and in order to be part of this new campaign, you need to click the link down in the description for Bluffing. Charles Airways is mentioning that for the last 3 months straight, institutions have been effectively buying up over 45% of Coinbase daily Bitcoin's volume. It's something that I find dangerous is when people refer to institutions, because institutions, ETFs, they are just a proxy into what people and other companies are acquiring. Be careful what they mean by institutions. The risk is to overstate institutions in thinking, oh, this is the smart money. Well, if you are looking for an answer of whether that is smart money by saying institutions, be careful, because there is a lot of retail that is buying through the ETFs. They're paying the fees to BlackRock and the other ETFs, and that's not necessarily smart money, despite the fact that their proxy is an institution, of course. And apparently this deal is a big thing. Always be mindful of all these deals, because the deals get accepted, get rejected. It's a back and forward, and we know how Trump is. Just going back into China, how many times he has said that there is a deal, then suddenly he starts moaning that China is a disaster or whatever, and then you go back to square zero. Just saying. Trump says EU will agree to buy US 750 billion worth of energy. Now I understand why he was moaning about all the eolic energy place everywhere killing birds. Now he cares about the birds. That's funny. EU will agree to invest 600 billion more than previously in the US. Michael Saylor launches Stretch, a 2 billion Bitcoin-backed money market-style vehicle. I don't know how many hacks he's trying to find really to get more exposure to Bitcoin. New TradeFi product channels BTC's return profile into steady yield, potentially pulling fresh income-seeking capital towards Bitcoin. And Mega Planet buys 780 Bitcoin, lifts treasury to 17,000 Bitcoin. All of those are bullish. Of course, we always have the noise in the background around the 80,000 Bitcoin that moved. We covered that extensively all last week, and we tried to close the chapter on the video on Sunday. If you missed that, you don't have to watch the full hour. I completely understand you need to work, but at least go open the video and read the description, the timestamps. You can find them as well on Telegram, Instagram, and Twitter. Particularly pay attention to the area where we talk about the incoming FOMC meeting. The chances of no change have increased now. I think yesterday we have 4.1 in the East chances. Now we have only 2.6. That brings the chances of no change to 97.4. And you can stop the video here, or you can go to the video yesterday when we did all the analysis of how it could impact a rate cut, a no rate cut, dovish tone with a hawkish tone, and all the combinations specifically to Bitcoin and altcoins. Here you can see the analysis as the public sees that. And I also included in yesterday's video 2 different ways of seeing this that I have perceived as well from the public. We have a very, very busy week this starting from Monday. We have job openings on Tuesday. We have the rate decision on Wednesday. Of course, we pretty much assume that there won't be any change, but I think in the tone of the speech, we are going to find out whether it's going to have an impact on the price or not. We have PCI and unemployment rate. All of that extremely important. Let's go and let's look at what's going on as we start with the beginning of the week, which typically kicks off with CME Gaps formed over the weekend. And this is a very, very interesting Monday, guys, because we already formed by Friday a small gap in here at 119. And on my video on Sunday, we were saying, well, possibly we're going to approach this level from the lower end. And by Monday, we're going to close the gap. And I was wrong. Actually, we went beyond that level and we opened Monday from 121 in CME Premium. That is more expensive, of course, than the price on Binance. As you can see in here, that is barely 119.7, whereas this week made it to 121 on CME. And from that end, we approach the gap coming down, and we have already filled the gap that was formed on Friday. The one that is still standing is this new overlapping gap that was formed during the weekend. Very interesting situation. It's very rare that we see overlaps of CME gaps, but you can perfectly see how they were formed. And the one from Friday is gone. The one from the weekend is currently in progress of being consumed. I sent very early, I think at 3 a.m. UK time, I decided to take a few trades. I woke up and I found an opportunity that I share with my Patreon members to average up and take potential advantage of this gap that we are forming. Price is currently at 118, and if we focus on the price action on Binance, you can see that the gap in Binance is being just filled. I'm talking about the one in Friday, but it's gone definitely. Now we have all the gap back into 117. I tend to think that the gap is not formed from here, from 117, but from the previous candle. And that is because there is a time gap that is not consistent in here on TradingView, maybe because of my time zone. So I place the gap on the candle 1 hour before, and that is giving me 116.663. That's where it ends, that large gap. And remember that from the previous week, now we also have this gap of 2K. That means that we have currently almost 2 gaps of around 2K. One ending at 116, 117, give or take, and the second one ending at 113.6. So those are the 2 gaps that overlap with fair value gaps and with liquidity levels that I'm now seeing if I can hit with my new average. My new average in my short is 116, thanks to the position I took overnight. I took partial profits because I forgot to give the alert on time to my Patreon members. Sorry about that, but I took a little bit of profits at 115, closing what I added at 118 before, and I added all that at 119.5, and that really helps now to have an average that can take advantage, small advantage from the gap 1, but decent advantage from gap 2, if we get there, of course. Now there is a few changes that I need to discuss on the 4-hour daily, not much really, but on the weekly, we're gonna have to cover the new bearish cross that we have once we get to that chart. You can see how after the breakout on the 4-hour that we have on the 20th of July, it's been all over the place, the price action, the momentum, support and everything. Eventually are gonna have to scrap all these lines and start from clean, but I would like to do that once we decide which side we are on at the moment. It's not clear to me if we are in a breakout on the 4-hour or if this is part of a breakdown on the 4-hour. So that's why I'm sticking still to the daily to make my decisions. Daily is still extremely relevant, guys. Remember, scenario number 1 is a rejection of orange coming back down, putting a lower low. We are still there and price hasn't managed yet to break the white line. Breaking the white line with a resistance that we placed yesterday as 63 is still valid actually. That can give us a second wave. Let's remove 1 and 2. Let's remove that. That is no longer possible. So let's say we break out in here, that can give us a second revenge rally into 78 or the full move into 85 because we have done some bullish consolidation. What do I mean by that? Well, the RSIs are resetting from 76 into a low of 59 and the price continues to go just sideways. So that is starting to flip into the area of bullish consolidation, which has a requirement, which is to get to very high levels of RSI first. We have gotten into 75. That's a fair amount of overbought levels of RSI. It's not the very top end of 80 or 90, but we can accept that we are in a period of bullish consolidation. Bullish consolidation, you get bearish divergences, but price doesn't break down, only the momentum does. You just accumulate bearish divergences and eventually you still see a breakout bullish. We could be within that context at the moment, in which case, if you are in a short, you need to know your enemy. You need to know how high can you hit. You can hit the 79 or you can hit the 85. That's all on the table at the moment. Now, if that fails, if this pivot closes today pointing down, or even better, if it closes lower at 57, putting a lower low, then we continue to be in this move down. If price doesn't break down together with the RSI, we are just still in a bullish consolidation. Very important to identify where we are, not just for my setup, but for your own setup. And if the bullish consolidation plays out, we got this flag that is currently pointing at 131K. So far, we have this double top and we have this new move up that is breaking the double top, but it really, for full confirmation, if you already entered during the liquidity hunt, if you want full confirmation that this is gonna carry on in that way and that this is not where it's gonna stop, in which case you need to take profits, of course, because you have already moved up 4%. Let's say that's all you're gonna get. The confirmation is gonna come from taking the highs of 120 and closing slightly above it. Not with a wick, with the body. You do not want a long wick into 123 and then a daily close below 118, because that is the same as this. It's just a liquidity hunt, in this case to the upside. So I'm going to calculate this 79 and we are right there against the resistance. So we do not need to track where is resistance. We are right at resistance. So let's say 78.5. That is if we meet with the orange line once again. That is 130. Let's make it orange so it matches with that line. And then you get 140 from the full move into RSI 85. That gives you the whole band of the RSI getting into those two levels of next resistance, assuming that we manage to break out above the white line. On a daily basis, candle close, of course. So remember, RSI is coming down with a breakdown. MACD put a bearish cross and is coming down. So we have momentum resetting, but price doesn't really want to follow it. That is the definition of bullish consolidation. Ask ChatGPT what is that and what are the implications of that. But basically what it says is if you persist in that way, you are in a bull flag and probably you're going to shoot back up. But of course we need a confirmation of that, and that we can get it only if we break this white line. On the weekly, we got this green candle in here. The green candle engulfs the red candle which left this week. The most bullish thing that we could have done is to close beyond the week to invalidate that. Because now if we get a red candle and it closes below support, then we still have the effect of both the bearish divergence from the previous Sunday settled, the long wick to the upside and all of that. What do we have that is currently bullish? We have a green engulf engulfing candle with the highest close in price on a weekly basis, which is now sitting roughly at 119. The previous highest was 119.004. This one is $300 higher. So those two things are bullish. But the red candle in here with the long wick still pointing up with the bearish divergence coming from market cipher are compensating and giving us still just a sideways. We settled the bearish cross on the stochastic RSI. That is of course bearish right there at resistance. So we need to put and weight all these factors together to make a decision. I've got my decision and it's already public. You do what you have to do with that, of course. We continue to have people selling at a loss Bitcoin in the SOPR and Ethereum people selling in profit. We have a signal. The signal came back down 8%, but it has recovered from 3.5K and now putting new highs almost at 4K. So this continues to have the same trajectory of this SOPR prior when we reach 4K for the first time. And I track it because I'm curious if we are going to repeat the plate with having an SOPR that goes very high, very fast, exponential, bringing the price into the 1618, which is 4.6K, and seeing a lot of people taking profits. That's ultimately what stopped the rally in the first wave up. When that was happening, Bitcoin was also taking big profits in here in the green, reaching 73K for the first time, instead of that huge profit taking, which already happened around early July. Now we are in the area of people taking losses. Losses from what? We are just below all-time high. Well, a lot of people must have entered even at 122, 123, and now they are realizing losses, particularly in the area where we reach 114, that liquidate a lot of people. And watch out, because they're just a few days. We are at 28th of July, so this week we might settle a candle above 70 on the RSI, and that is really a big deal, guys. The number of months that we stay above 70 is crucial to understand where you are in the market. If you missed the video on Sunday, that now is your problem, not my problem. So on Sunday, I cover extensively tons of indicators, and I want to make this video a little bit more easy to digest. We don't have huge deposits as of today, but if you want to know what happened last week, watch the Sunday special, because probably those are one of the top 3 more important things going on last week. And considering that I think that they haven't distributed yet, you want to know what's under the carpet, because it doesn't look really great, in my opinion. Now we are in grid at 75, so we are approaching that extreme grid very closely. So get your 3 espresso cups ready. Very dark coffee. Go find a mirror at home and start slapping your face, because we are looking for exits. This doesn't mean you have to sell right now, but it means that you are consciously, actively looking for exits. Those exits may come 20K higher in price or 50K higher, but your attitude should be, where is my exit? Where do I get off the bus before the bus impacts with a building and then I end up dying with all the rest of the people inside the bus? Sorry for the example, but you should think in that way pretty much. And I don't know, I was making reference to this movie. Maybe you are too young to remember, but there was a movie like this with Keanu Reeves in 1994 called Speed, and it was all about being in a bus that couldn't stop. I think it's got the brakes broken or something. So make sure you don't end this cycle in a bus like that, not being able to get off, because that always ends very ugly. All right, let's look at liquidity pools, let's look at the order book, and let's look at general markets as well. We can see that we have in the close proximity these 2 levels. You can flip a coin. It's impossible to tell whether we're going to take that or that. We are very close to taking the top end. At that point, we will reach probably 121, 122. At that point, we kind of confirm the breakout to the upside, or at least we increase the chances that we're going to carry on into the longer term liquidity, bucket number 2, located at 125. But here's the thing. This one in here is more concentrated. It's got a little bit more of liquidity as well in the past 30 days. We can confirm that, at least if we look in CoinGlass. 117 now is the closest proximity peak, right? But at that point, we have a cumulative of 288 billion. Whereas if we go slightly higher, we get almost double the liquidity by getting into 121, 122, because this is lower peaks, but is spread away very evenly. Thanks to that, you can reach even 6 billion in liquidations by getting into 122. So this versus this, probably this wins. Now, if you go lower and you take these highs of 114, you can get into the territory of the 10 billion in liquidations just by getting into 114. By getting into 107, you get into 20 billion. So this is 2.5, let's say, this is 10, this is 5, and this is 20, okay? Just so you size what you're seeing in the screen. If we remove some of the liquidities that are coming from lower leverage, we can see that the 50, 100x located at 121 is the highest concentration of high leverage. They tend to get smashed first. They get that privilege for some reason. Do not ask me. Sometimes there is less liquidity in an end, but things get more heated where there is higher leverage first. Just my experience, and it's not guaranteed, it's not always the case. If we add the 25x's, then we get more liquidity in here. If we just focus on 10x, then that is 130. Now the 10x and less tend to be more experienced, right? They could put a lot bigger total size of the positions, but I will say that 100x, 50x is typically the positions from the beginners, in average from retail. They need that extra help from the loans coming from the actual huge leverage to get big positions, but they expose themselves more. Now, 114 is the largest if we take all of them, and then 107 as well. And remember, getting into 107, that liquidates almost 20 billion. That is just analysis of sizes, not necessarily larger size means this will happen, neither this will happen first. But trading knowing where the liquidity pools are is extremely important to get an idea of what could be more motivating for market maker. 1, 2, to not place your own risk there. Do not contribute to make the fire bigger. The defense that we saw over the weekend at 120 has decreased massively. So from 74 million around there, it has decreased to 45, not half, but we have now the two levels of 44 and 45, whereas before we have a concentrated level of 74 at 120. What are the purple whales doing? They are mildly adding into longs, not very aggressively. Supports seems to be at 114. We can still see large orders at 117 on Binance. And if we go into Bookmap, we can confirm that as well. It's very heavy, the liquidity aggregated around 117.5. This comes from altogether Binance, Bybit, OKX, BitGet. Do not assume that because I'm showing you a lot of orders there that they're gonna stay there if the price comes lower. There can be rug pulls, there can be anything. For example, this 115 stayed all week there and it ended up being support, but that's not always the case. There seems to be decent amount of support versus percentiles when we look at different percentages of deviations of the price, 10, 1, 2, and 5. We got percentiles of 73, 71, 79, and 58. So 5% has the least when it comes to a ratio between 5% up or below, but the rest are in the 80 percentile, so that means that there is a decent amount of defense on the lower end, the support. You can see that as well here on this different view. Liquidations on high block capital showing 114, 107. The usual suspects are all there. The difference is that it's showing 130 as the largest, at least in the last 1 month. The longs are at a higher risk at the moment in terms of liquidations, not by a lot, and you can see how we continue to flip sideways, liquidating areas where the open interest is increasing too much. You get open interest increase of 450 million, well, you go straight into that level to take them down, and then you come back and take this level that also has now contributed with 634, that is located at 118. I wonder if we are going to get really into 119 109 in a sensible amount of time, because that is very big as well. It's got 600 millions of open interest contribution together with this level at 111, 397 and 400. So all of that pack gets to over $1 billion in open interest. And yeah, we broke out from the falling wedge. We left behind some fair value gaps if we consume up to the second one at 117.5, where we are seeing all this current defense on the book map of all the exchanges together. Well, we could do that as a retest of the breakout and then continue into 121 and liquidate a big chunk of liquidity levels that we see in here. Now, if we were to re-enter around the 116 and carry on lower, I will see that as a sign that really the market maker, Tricky Bastard, wants to go slightly lower, because that will destroy the pattern of only a retest of a breakout. At that point, I will be interested to see if 114 holds as still the line of support, or if we really want to enter into the slippery zone, which is this area in here. The faster you cross up, the same speed you take on the way down. So not holding that last line of support is our ticket to get very quickly at the lows 110. Remember that on the weekly, the RSI is in a resistance in here, and it's a very critical moment. We could see that breakout. We have covered this multiple times, but I'm just interested because we continue to hit that level as a resistance. This is not the first week. It's 1, 2, 3. This is going to be the 4th week, 1 full month battling with breaking out from there. We need to keep an eye to see if we are going to see a decent rejection or if we are going to break out. If we break out, we're going to do that for the first time ever in the history of Bitcoin in a topping year. In a topping year, you tend to reach the highest levels of momentum of 90 to 98, for example. After that, you start a period which we call the period of bearish divergences, the downside channel into the bear market. Halfway through, you're still in bull market, but on the lower end, you are in the bear market. So bear market is somewhere in here, and we're expected to continue our way down. The people that have a preference to think that we are exiting the 4-year cycles, that the models of Bitcoin are going to say goodbye to the volatility, that the institutions, that deep bear long markets are gone, might put a big smile if we put a breakout in here, because that will give early signs that maybe they are right. Let's go into general markets. Let's have a look at how things are looking. This is extremely relevant because general markets are well informed about all the events this week with the FOMC, the tariffs by the end of the week, and all of that could either make or break in general markets, and general markets doing so influence everything in crypto, of course. If you want to see any of my charts anywhere from your computer, from your phone, remember that in my Telegram channel, every post I put, you can find my Telegram channel with a link in the description. Only use that unless you want to get scammed by other people. All my posts on Telegram contain this link that says TTP charts. If you click on that, you're going to get access to my charts with all the annotations, with all the indicators, and with very cool menus where you can navigate all the different charts for all coins, for general markets, and of course for Bitcoin. You get up to 2 charts a day for free, but if you want to support my team and make my life easier, consider joining one of these subscriptions, 3, 6, or 12 months. So we have a very positive Friday close. It was good for pretty much everything. It's not the largest green candle ever, but of course it produced all-time highs on S&P and Nasdaq. And we can see the big tech was happy in different areas of the market as well. Finance, retail trade, and many others. Let's go and let's look at the dollar. Let's see how things are looking at the moment. Oh wow, we're getting a high bullish divergence here on the dollar. And we are doing that at the bottom of a falling wedge, which is by itself a bullish pattern. I've been following these moves in here to see if we're really forming bottom formation as we face the long-term support coming in here. This is a multi-year support that I'm tracking from 2011, just like we did did with the 1985 that we have in here. That approach allows us to identify the top of dollar at $110, and that's why I'm tempted to see if we bottom around 95, 96 with this falling wedge around there. And tracking dollar is extremely important. Everything is priced in dollars, S&P, Nasdaq, Bitcoin, everything. So if it's too strong, the dollar, that can bring a little bit of a dip. And we don't need a big move. For example, if dollar moves now into 100 or into 99 to 100, facing just the lost support, that revenge move could produce a little bit of a shake. Remember, we just had a V recovery on Nasdaq and S&P, and usually when we get those V recoveries, when we get back to the new all-time high, if you look back in the past, we tend to have a small shake off before continuation. Even if you continue way higher, you get an 8%, 6%, or even 10% correction before that continuation. And that could come together with the dollar bouncing off support. Gold couldn't put a breakout in here with the close of Sunday, but now is back again in the territory of potentially bringing in a new breakout. It's gonna do that until it manages to do it, right? So it could be another rejection by the end of this week. We are gonna monitor it definitely, but now it's still just a sideways. VIX is starting the week pointing up, but it lost support. So that should bring some reassurance to traders that at least we are not breaking out into the expansion. That should freak out everybody, but it's not the case. Luckily for everybody, we continue on the way down, entering territories of very low fear and volatility coming from the VIX index. That is definitely influenced by the all-time highs that we continue to see on the S&P and on the Nasdaq. Look at the momentum on S&P is pointing up, whereas the Nasdaq is pointing down. Nasdaq in this chart is already open, starting the week now with a red move in here. From the all-time high, just very mild profit taking probably taking place. The S&P, as opposed to the Nasdaq, is starting the week with 1 point up, so in the positive still. What I care about the S&P is how we approach this area of resistance at 71. 71 in the price currently is 662 on the S&P. So if we approach this level of resistance, we could still see an additional move up on the S&P of 4%. On the Nasdaq, we are in a breakout, right? So I don't see any level of resistance coming in yet. On Russell, we are also getting very close to that resistance. This case is at 66. So let's update this. It's a little bit closer to the price actually. So that is quite close. It's at 2363. Just a move of 4% again on the S&P and the Russell can hit a level of critical weekly resistance. Keep an eye on that. And on the S&P, on the 2 weekly chart, I haven't covered this in a long time, but it's very important. On the 2 week, you can see the cycles that we have done 3 times in a row with the S&P. We had this breakdown. Each of them is a bear market for the S&P, not just for S&P, but for crypto, of course. So if we are approaching this level as a resistance on the 2 weekly, we have our eyes open. Right now, as you can see, we're hitting right there the resistance. And of course, I have placed this very vaguely in here, trying to match somehow with all the peaks. I allow this level to be higher. It depends really how you place it. You could say, well, we have a clear breakout or maybe not, but we are in that area of the definition, whether we are really breaking out from 67 after a huge move down in here to maybe see an extension of the bull market, which is really crazy. This breakdown in here with V recovery, it kind of plays a similar role to March 2020, but this time the V recovery is happening in the later stages of the bull market after we have already hit 76. In this case, we have all of this to be the bull market, and around COVID, we did the V recovery that allowed the bull market to carry on. My question is, if we recover in here, are we just going to have an extended bull market like this? Or this is going to be just a shout and then a breakdown like that? We'll see. Because eventually, the cycle needs to enter the territory of the channel down. That's what we're looking for. Here in the price, you can see each and every single bear market, how it hits the level of 0.5. and that's also interesting because from the highs we kind of have already reached that with the move down during the V move. Guys, thanks so much for watching the video. I'm just gonna do a very quick wrap up on Bitcoin before I let you go. I am at the moment thinking about two areas. The low-hanging fruit, which is the CME gap that we just formed. Feeling that gap will be healthy for the price, particularly the longs should appreciate Bitcoin closing that gap. Having two gaps of 2K on CME right underneath the price is just too attractive for traders over the week if we get overextended or if we enter into the FOMC volatility to close those gaps. And going too high, leaving them behind is not great. So the low-hanging fruit is the first gap. The second gap is a little bit more of a debatable target, that 114, and the 107 is now with this bullish consolidation a little bit more difficult. Now still, I am in a short and I'm building consistently my short into that. Here and there where we find support, I am going to build a long, but so far all I did is at 115 close a little bit of my short. I didn't actually open a long. I should have probably, but I only managed to react to take some of the profits from the move 118 to 115. All eyes on this white resistance to see if we can get another revenge rally or if we get really lucky, which is low likely to get into the 85, but it is doable. Thanks so much for watching. I'll see you in the next one. Bye bye.